All right. Hi, everyone. This is Rob Barnett from Bloomberg Intelligence, and I'd like to welcome you to today's webinar. We're very proud to be partnering with the fantastic team at Cowen. We're going to have a fun discussion today, I hope, on the energy transition, and specifically we want to hone in on the topic of hydrogen, and we want to compare a little bit and contrast on the idea of batteries versus hydrogen. So we've got a great lineup for you today. We've got Mark Bianchi, Gabe Dowd, Jeff Osborne, all from Cowen, all very focused on the energy transition. Guys, I had a really fun time looking through your coverage list. Mark, you cover everything from NewScale to Baker Hughes. Gabe, you look at some of the charging names, but also Matador Resources and PDC Energy. And Jeff, a very wide portfolio hitting the fuel cell names, also Tesla and some of the other really well-known clean tech titans. So I think this is going to be a very fun discussion where we've got a real good mix of old energy or traditional energy along with some of the clean tech names. We've also got Sally Ilnaz, who's on the call from Bloomberg Intelligence, who covers some of the oil majors over here in Europe for us. So that is the framing for who's on the call and what we're going to be discussing. And to kick off the first idea, when we were visioning this session, I think Elon Musk had just tweeted that overwhelmingly he thought the world was going to choose batteries rather than hydrogen over the coming years. So as a starting point, we'll go down the line and walk through whether you think Musk has the right idea or whether he's maybe not thinking about this the right way. So, Mark, over to you first. Batteries versus hydrogen, is one of them going to be dominant?
I think it very much depends on the application, right? As we're seeing, batteries are good for Teslas. They're good for what Musk is doing with his business, and Jeff can talk to that. Part of the problem that you have is you do lose a lot of the energy creating hydrogen and then ultimately using it in a fuel cell versus just, if you've already got the electrons, why don't you just use them? So there are other applications, though, where you may need to consider hydrogen. There's certain parts of heavy industry, there's certain heavy transportation applications where a battery just doesn't make sense from a payload perspective. So, I think we're going to see a variety of solutions that use both, but depends on the application.
Okay, very good. So let's go down the line. Gabe, over to you next. I know you've got more of a mobility focus. How do you see this hydrogen versus battery question playing out?
Yeah, Rob, I think similar to Mark's comments, it depends on certainly the application. I think for passenger vehicles, the market and OEMs have already spoken. It's lithium-ion battery solutions. There's only one or maybe two fuel cell models out there. There's the Toyota Mirai being one of them, but obviously you've had a number of OEMs over the years. And just very recently, whether it's Ford, GM, Volkswagen, Stellantis, the EV pure plays like Tesla, obviously, and Fisker, and some newer ones that have emerged, are all kind of migrating, certainly on the passenger vehicle side, towards lithium-ion battery solutions. I think the key debate within mobility, to Mark's point, is what solutions do medium and heavy-duty vehicles use. Jeff could certainly talk more about this, but there's a number of OEMs within the medium and large commercial vehicle space that are saying it'll be a mixed solution. It's not a one-size-fits-all. There are some who are going all in on the battery side. I think Stratton is certainly one of those in their brands. Volvo believes it'll be a mix. So it's certainly an interesting debate. There's a number of reasons why you could argue each could work. To Mark's point, I think the technology currently for lithium-ion batteries maybe not quite there for for commercial heavy-duty vehicles, but certainly from an infrastructure standpoint, maybe that's ahead in terms of lithium-ion batteries and charging stations. So a lot to certainly think about, but ultimately, I think passenger vehicles, the answer is probably more clear. Medium and heavy-duty commercial vehicles, certainly less clear.
All right. Okay. So, Jeff, over to you for the sort of last framing comment here. I know you're joining us from your holiday in Europe. I think you actually just toured the Porsche Taycan factory. Where do you sit on this question? And, how do you think about it?
Yeah, you're right. I was in Zuffenhausen yesterday at the Taycan factory. They're making about 200 of them a day and cranking those guys out. Great to see the progress there for Porsche. Obviously, very expensive vehicle and not at the mainstream of the cost point. But going back to your question, first of all, Elon doesn't have necessarily the greatest track record of predicting the future. Even for his own company, and certainly takes a narrow view on some technology choices for take autonomous driving, for example, with a camera-only solution. But he's been against hydrogen for quite some time. I'm a bit more bullish. I've covered the fuel cell name since 2006. They were publicly traded science experiments for over a decade. Finally, the technology works, and you're starting to see an ecosystem around it. Coming back to what my two colleagues have said, certainly trains, trucks, buses, and boats are the two applications that if you did have a battery, it would be obscenely large, obscenely heavy, and take a very, very long time to recharge. Those are sort of the variables that lend itself more towards hydrogen. And then in your neck of the woods, Rob, if you look at the success that Zero Avia has had in aviation and some of the air initiatives that Airbus is working on, certainly aviation is a market that maybe in the 2030s would drive this. So I'm quite bullish on the hydrogen economy. Agree it's not going to be for passenger cars. Don't really think there's a use case there. And also if you just study how the gasoline distribution network is and sort of the franchise model, I'm not sure that there's an incentive for folks to put in hydrogen distribution refueling stations, at least in America. But maybe Korea and Japan go down that path for hydrogen passenger cars, but I think the rest of the world will be stuck with batteries.
Okay, thank you. Sally, you look after Aramco and some of the Middle Eastern oil producers. I know hydrogen has been all the rave for a lot of the oil companies these days, and I doubt they talk too much about batteries. Tell us how you're seeing it from your perspective.
Sure. Very quickly, though, Rob, we actually closed a survey that we held with Bloomberg Terminal clients, and I actually added a question on there to share the result to that question, which I thought was interesting. I mean, to that initial question you had on hydrogen versus energy markets this decade, and 73% of 163 people said battery storage, and the rest said hydrogen. And I think also importantly, I think it's a time frame thing. Perhaps hydrogen is of the technology. Can you hear me? Okay, sorry about that. I don't know where my audio cut exactly, but I'll go through it again very quickly. Sorry about that. We recently closed a survey that we ran with our Bloomberg Terminal clients, which 163 people took, and we actually had a question on there about hydrogen versus battery storage, and the question was, which technology will have a more meaningful impact on energy markets this decade? And actually 73% said battery storage, and the rest said hydrogen. And I mean, there isn't really, I think it's already been been well covered. I think it very much depends on the application. And it's also a timeline thing where the hydrogen is perhaps in relatively early days in terms of technology. So this is perhaps more of a next decade type of thing. But in terms of your question on Aramco, I mean, it looks like this will be a big part of their decarbonization plans and strategy. And I think the way we're looking at it is in the short term what they're planning and in the long term what they're planning. In the short term, it's very much of a blue hydrogen story, and this is something that they're planning on the Gulf side of the country in Saudi Arabia. This is where they already have a lot of facilities, and this is where they already have a lot of carbon capture assets. So it makes sense for them to be actually expanding into blue hydrogen, which they're planning to convert into blue ammonia, which would be easier to ship. And they've actually tested sending blue ammonia to Japan back in September 2020, which I believe was the first blue ammonia supply chain demonstration. And by the way, ADNOC over in the UAE is doing something very similar, and I think it makes sense for these countries and these companies to be doing this given their existing customer relations and supply chains, especially in Asia. In the longer term, they do have plans for green hydrogen as well, and this would be on the Red Sea side of the country, and it would be part of the NEOM project, which is this, it's Saudi's mega development in the Northwest region, and this green hydrogen project is a $5 billion project, and it would, if it is built, it would be the biggest green hydrogen project in the world, I believe. So it would have about 4 gigawatts of solar and wind capacity, 120 electrolyzers produced by ThyssenKrupp. And again, I think the end goal there would be to turn it into ammonia and to ship it abroad. So it's a green ammonia kind of strategy. So, and I think what's important, going back to the first part of your question, it's a subtle and small thing, but I thought it was interesting. In the last earnings report that Aramco had, it was the usual stuff of, how they did in the last quarter, but also they actually spent quite a bit of space and time to talk about their plans on what they want to do with hydrogen. So I think this is quite telling about what the company's long-term strategy is, because usually it's not really the company where they talked a lot about the energy transition, especially when we compare them to some of the other European oil majors that we also cover. But it seems like they are starting to talk more about it, and it looks like hydrogen will be a big part of their long-term decarbonization strategy.
Okay, very, very interesting, Sally. So let's shift gears with that. I think that's some useful perspective. Mark, you cover Air Products, Air Liquide, some of the chemical incumbents that have some tie-in to the existing hydrogen economy. And so when you think about this question, do you think that the sort of history that they've got gives them a leg up as you think about hydrogen in the future?
I do, and it's interesting that Sally was just speaking about the NEOM project. That's Air Products project, and they're making a bold bet, if you will, on green hydrogen in the future, and they're trying to build out this mega scale, world scale export project, which is, there's several other of these projects that are in the planning phases, and we'll see if they ever really get off the ground. There's, this big project in Australia that BP's now saying they're part of, and we'll see where they go. But Air Products seems to be the furthest along. They're, the shovel's in the ground in NEOM, and that project's happening. They did push the timeline out a year to 2026 from the original 2025, but it's on track. They're going to, as Sully said, create green ammonia. That's going to be used as the transport mechanism. But ultimately, the strategy is to not sell green ammonia, but send the ammonia to somewhere around the world and reconvert it back into hydrogen and have a whole supply chain devoted to it. So almost like a Standard Oil type of approach where they want to own the supply chain. Difference being that, nobody's kind of owning the resource like we do with oil and gas. Anybody that's got the money can go out and create green hydrogen. But it's kind of interesting how they're taking this bolder approach. I do think that there is some reference and domain expertise that matters here. So like you said, these are the leaders in hydrogen. Hydrogen's a dangerous thing to handle. And, you start talking about distributing it into consumer applications versus industrial applications, and there's some other concerns that come along with that. We've been using hydrogen for decades in refineries and in industry without problem, and I think that that's going to lend itself more easily to some of the applications that we see over time. So maybe another argument for why we won't see as much of the passenger vehicle market end up using hydrogen or hydrogen for heating homes. So those are some aspects to consider, and I think it also sort of argues why these large industrial gas companies have, a bit of a stake in the ground as it relates to being major players in hydrogen.
Well, what's your sense on that topic, by the way? How difficult to store and transport is hydrogen versus traditional hydrocarbons? Does it require the build-out of an entirely new supply chain, or can we leverage some of the boats or depots or things that we built for some of the other fossil fuels out there?
So one thing is you can't just put it in a pipeline. It causes embrittlement on carbon steel, and you would need to retrofit the pipeline capacity. And that's the most efficient way to transport hydrogen. You can't compress it and transport it long distances in a tank. You need to liquefy it or turn it into ammonia or some other organic carrier. So, those elements of hydrogen make it different from hydrocarbons, where gasoline, you just put it in a tank, or we put oil in a tanker, and it can exist at atmospheric pressures and no, oddball temperature. You start talking about liquefying hydrogen and transporting it. That's a lot of cost, and it's something that we don't have the infrastructure for today.
Okay, very interesting. Gabe, I want to come back around to you. Given you look at the electric vehicle charging infrastructure names, but you've also got some tie into hydrogen, how do you think this evolution occurs? And do you see like a realistic role for hydrogen on perhaps the heavy duty side of the equation longer term? And what are the stumbling blocks to that long term future?
Yeah, sure. I think like Mark highlighted and kind of like I hit on earlier, I think there certainly won't be a one-size-fits-all solution for medium and heavy duties. Again, I think on the passenger vehicle side, it's pretty much a slam dunk. I think that it's certainly where the market is heading in terms of relying on lithium-ion batteries. But the medium and heavy-duty space is certainly just given where some of the energy density figures are for lithium-ion batteries and how impractical it would be, as Jeff mentioned, given the size of the overall system you would need to power a medium and heavy-duty truck. I think there certainly opens up room for additional applications and solutions, hydrogen being one of them. Jeff could certainly talk more about than I can, but I think one of the positives on lithium-ion batteries for the passenger vehicle market is that infrastructure component, as you noted. And maybe we're not quite where we need to be in the U.S. from a public charging station number, but certainly government policy and the bipartisan infrastructure bill with funds set to be unleashed perhaps later this fall, maybe early 2023, that'll certainly help materially improve charging station installations here in the U.S. So we would certainly anticipate that as being a further driver in EV adoption here in the U.S., which continues to trail Asia and Europe. But again, I think it's pretty clear the passenger vehicle market relying on lithium-ion batteries, medium and heavy duty, not so clear. There's a number of things to think about. One of the companies we follow is providing PACCAR with batteries for some of their models, which will set to be sold later this year. But again, there's certainly room for hydrogen, and some of the OEMs have talked about certainly not being a one-size-fits-all approach.
Yeah, very interesting. What is your sense when you look at the potential EV rollout? Do you think that the market, say in the U.S., since you mentioned it, is it more constrained by EV charging infrastructure at this point, or is it more about the battery infrastructure, or lithium constraints, or auto manufacturing constraints? What's the bigger hurdle in your view?
It's probably a combination of all three, the way we kind of like to think about it, and I think certainly some in the industry like to talk about it, is probably the 3 C's, right? Choice, number of EV models that are out there, and there's certainly been a ton that have been announced and unveiled over the past couple years. So a lot of choices for U.S. drivers here. The Ford F-150 Lightning, line of excitement around that. The Porsche Taycan. Fisker, Lucid, the list goes on. And there's a number of vehicles now at a more reasonable price point, and kind of that $40,000 range, I think is certainly a vehicle that's more affordable than something like the Taycan or the Lucid. So that could certainly help drive EV adoption. So choice, cost, which is a little bit of a prior to this year, you've seen lithium-ion batteries decrease significantly on a cost standpoint from 2010 to 2021. You've seen an annual decrease every single year, and so that could continue. And I think the expectation is that does continue, which also helps get EVs on an upfront basis to a price parity level with their ICE counterparts. But given the inflationary backdrop, material tightness, and just the overall environment that we're in, that's likely to reverse in 2022. You could see lithium-ion batteries increase on a price standpoint, but that's certainly, again, overall bigger picture, that's improved. And then the charging piece, which we talked about, that's also set to improve. In the U.S. in 21, we installed maybe 24,000 public ports. If you kind of extrapolate that out through 2030, you fall well short of that 500,000 target that President Biden has kind of put out there. So certainly installations need to accelerate, and that kind of helps the psychology with range anxiety. And again, we think it will on the back of the bipartisan infrastructure bill, the first piece of which, the National Electric Vehicle Infrastructure Program, or NEVI, will allocate $5 billion to deploy fast chargers along highway corridors. Again, we think that'll help the psychology and range anxiety, and with funds probably delayed a bit, but let's say we do get some funds here late 2022 or early 23. Regardless when it starts, it's essentially about $1 billion a year for the next 5 fiscal years to deploy a significant number of fast chargers. So yeah, that'll certainly help. And again, so long as supply chains cooperate and you get the infrastructure and continue to get the infrastructure in the ground, and the number of models that are available continue to improve, we think all that will help drive U.S. adoption higher, because 2021 figures, U.S. is just under 5% in terms of light-duty vehicle sales. So certainly well below where everyone anticipates it getting to, which is 30 to 40% by 2030.
Okay, very interesting. By the way, for everyone listening, in the lower right-hand corner of your screen, there should be a little chat box. Feel free to ask a question. We'll try to work it in and get to as many of them as we can. We've already got a couple that have come in, so definitely let us know what's on your mind, and we'll ask the panel. So with that, Jeff, you cover some of the fuel cell names, Plug Power, Bloom Energy, and when I think about them, I think of them as more of a stationary source solution, providing backup to the power sector, these kinds of things. Where do you see the kind of fuel cell technology in the power sector playing in, and how do you think the economics of that compare with batteries, which we're seeing increasingly deployed on the grid as well?
Yeah, it's a great question. As you look at the two worlds, mobility and stationary power, on the stationary power side, Rob, I think the bulk of the levelized cost of energy for companies is really dictated on what your fuel price is. And today, Bloom Energy and Fuel Cell Energy use natural gas. So people are really buying the product more for resiliency and diversification versus the traditional electric grid, as opposed to a traditional savings or being greener than the grid. But resiliency is the number one reason, and also this concept of time to power. So if you're going to go build a new factory in the U.S., calling up your local utility and getting a permit for a multi-megawatt interconnect can be quite cumbersome. And so, having this type of on-site power is a way to do that. But, getting to the crux of your question, typically these companies are in sort of the 10-ish cents, plus or minus a penny in terms of levelized cost of energy. And obviously, as nat gas goes up, every dollar that might have a fraction of a penny impact. And, again, I think there's a relatively price inelastic buyer here. They're buying it for other reasons than saving money. So the cost really is less the factor. In terms of batteries, clearly solar with on-site storage is a better mechanism in terms of a cost structure, but you wouldn't have this running a hospital or a data center for baseload power, and that's what typically is being used for Bloom, for example, more behind the meter versus fuel cell is a fuel cell the size of a tennis court that is in front of the meter. And Doosan does a little bit of both, but those are the three main players. And just lastly, there is a new emerging company to watch. We had them at our conference recently, but Mainspring Energy has a deal with NextEra. Mainspring makes a linear generator, and they have both in front of and behind the meter applications. And some of the challenges with solid oxide fuel cells that like Bloom make, for example, are that they take multiple hours to warm up and cool down versus a generator type application, which can use hydrogen or ammonia or natural gas. As the fuel can turn on and off instantaneously, so you can use them for applications like frequency regulation in addition to baseload solutions. So certainly emerging companies in this space to watch.
I'm intrigued that you brought up NextEra. I was actually going to come to you with a reply question on that, because one of the things I find quite interesting they recently announced their so-called Real Zero proposal. It's a very interesting set of ideas that they lay out about how they're going to reduce their emissions all the way to zero and not using offsets or anything like that. And they talk about the idea of using hydrogen in a CCGT eventually to help that long duration storage. And I want to get your sense on, do you find, are you thinking about solutions like that, or is it so long dated that it's sort of outside of your net present value when you think about the energy system?
Yeah, I mean, look, Rob, Cowen has a research report series called Ahead of the Curve, and so what you're talking about is almost like ahead of the curve. So it's our job to think about things in the future, but I think about sort of short-term storage today. Long-term storage is evolving. There needs to be market mechanisms to pay long-duration batteries, and that's lacking in many parts of the world. And then as it relates to using, CCGT or other sort of baseload or, longer duration solutions, I think that will evolve. But it's a sort of a evolution of A, you need the fuel, B, you need the technology, and C, you need the regulatory construct to reward people to do it. But if you study what NextEra said at their Analyst Day, 2+ weeks ago, they're starting with decarbonizing themselves, and they want to decarbonize the electric grid. Then they want to decarbonize heavy industry. And I think what you're asking about, sort of fits into Camp 3 around decarbonizing heavy industry. And so things like steel, cement, chemical manufacturing, a lot of those solutions, there could be assets that they help finance and own and then sell power under long-term contracts to industries like that. But that's probably more of a 2030 and beyond type of phenomenon, and if we wanted to kickstart it, you really would need that $3 credit that President Biden's talked about.
Yeah, I think we see it in a very similar way that the first applications of hydrogen are probably going to be industrial rather than some kind of long-duration storage in the power sector. But let's see how it unfolds. Mark, I want to come to you on this idea. One of the names in your coverage, NuScale, the companies that's trying to get SMR, small modular nuclear reactors, to the market. How do you think about that kind of option versus hydrogen for providing that baseload or dispatchable form of power?
Yeah, I mean, we think that that's a viable option for decarbonizing power generation. If you look at the kind of cost structure that NuScale has talked about, they're looking to be in the $40 to $60 a megawatt hour, which, is going to be higher than your leading edge renewable costs, but not everywhere has those kinds of costs, right? If the sun doesn't shine or the wind doesn't blow, you're kind of out of luck. So having an option of baseload power generation, reliable power generation for something in the $40 to $60 range would be quite attractive. It also solves a lot of the pushback that the general public has around nuclear. For right or wrong, there's a lot of concern about cost overruns and risk to the public from a meltdown and so forth. And these small modular reactor designs, NuScale and several others, directly address those. There's also another kind of convergence of this whole hydrogen battery power supply discussion, where you could be using nuclear power to produce hydrogen. It's known as pink hydrogen. One of the challenges with electrolysis is having full utilization on the electrolyzer, right? So if you think about wind and solar, and Jeff can talk about, what their capacity factors look like, but it's way less than 100%. You're talking, maybe 20, 30, 40%. So if those assets aren't generating power around the clock, you're not getting full utilization of your electrolyzer, so you're not getting the most value out of that asset. The nuclear power can run 24/7 and keep that electrolyzer up. And we showed a comparison of this in one of our recent reports where, if you start talking about the cost of pairing wind and solar with a battery, you're getting into that potentially $40 to $60 per megawatt hour range, which again is back to what NuScale is kind of quoting.
$40 to $60 a megawatt hour would be pretty amazing. I mean, I think current generation nuclear is well in excess of 100, but there's been a lot of cost overruns. So it's going to be a really interesting space to watch to see whether we can get some of these changes. Now, Sally, I want to come to you real quick because in the context of having a discussion about power and hydrogen and how it plays into it, we've already mentioned that BP is making a big investment in this Asian renewable energy hub project in Australia, and power and hydrogen are a big part of the narrative for the European oil majors at this point. So what do you make? Do you actually think that that's going to become a real core component of their business? And does that contrast at all for like how an Aramco is talking about it?
Yeah, I think it's a very good question. And what we're seeing when we look at these, especially European oil majors and what they've been talking about in earnings calls, is we definitely see a lot more management confidence, because when we look at the trends of hydrogen just being mentioned in earnings calls, we see a significant uptick, especially since the beginning of 2020. And when we look closer at their strategies, it's again, similar to what we said about Aramco, it's a green hydrogen versus blue hydrogen kind of story, where most of the European oil majors we're seeing leaning towards green hydrogen plans, and this is not surprising given the ambitious renewable power generation strategy and the targets that they have. And then when we perhaps compare that to, we already talked about what Aramco wants to do. It's blue hydrogen in the near term, maybe a lot more green hydrogen in the long term. But when we contrast it to the U.S. majors, especially Exxon, that's a lot more of a blue hydrogen type of story, which also makes sense given kind of their focus in their strategy on carbon capture. So I think, when we look at the European oil majors, we already know that Shell and Equinor are planning a joint big project called North H2. That has a 4 gigawatt target by 2030, 10 gigawatt target by 2040. It will, we think that, in Europe, Northwest Europe is probably the most attractive jurisdiction for these projects to be taking place, given the large industrial kind of complexes with refineries that's already there, the pipeline infrastructure that they have, the fact that it's a major transport hub over there, and the proximity to North Sea, where they have kind of ample natural gas supply as well as offshore wind supply for green hydrogen in the future. And again, I mean, compare it to Exxon, it's a blue hydrogen story, and what they're pursuing is at the Baytown refinery and petrochemicals complex, which is, as I said, kind of taking advantage of that CCUS infrastructure that they are focused on as well. So that's how we're looking at some of the European majors that we cover and what their strategy, how their strategy has kind of been evolving, and comparing that to how we're seeing perhaps what's going on across the pond.
Gabe, I want to get your reaction. You cover some small independent U.S. E&Ps that, from the outside, it doesn't look like they're as actively engaged in the energy transition conversation. But I'm curious, are they going to play a role in any of these kinds of discussions about hydrogen or just the general shift that we've been thinking through?
That's a good question, Rob. I certainly don't think from a hydrogen standpoint you'll have any of the guys on my list particularly active in that area, but certainly they'll play a role in the energy transition by simply lowering their carbon footprint per barrel produced. And there's also a lot of low-hanging fruit with just methane leaks and cutting down on flaring. Everyone that I cover in the Permian Basin in Texas have laid out plans to materially reduce routine flaring, as obviously as a way to limit your CO2 emitted per barrel produced. And that number has significantly decreased over the past several years. So certainly a lot of the mid-cap E&Ps, they're all also starting to publish sustainability reports every year that not only highlight the E, but also the S and the G component of ESG investing. And they're certainly part of the conversation. May not be as active as some of their larger cap peers or even the integrated oil and gas companies, but they'll have a place in the discussion, certainly.
Very interesting. Okay, Jeff, I was hoping to come back to you on more of a discussion around the idea of incremental demand for wind and solar potentially being driven by electrolyzers. Now, I know that Mark was talking about the idea that capacity factors or load factors on wind and solar aren't as high as nuclear or some other types of power assets, but do you see an incremental upside demand case that's in any kind of near-term way for wind and solar as a result of the broader hydrogen theme we're talking about here?
No, I think you're absolutely seeing it, Rob. Markets like Australia, parts of Western Europe, I think the challenge is that utility-scale solar, even when it was just being funneled into the grid, still has a massive problem with interconnection and a lack of high-voltage capacity. And so there's still an integration challenge with solar and wind being paired with the grid with electrolyzers. But, SMA, which I think you cover as well, has highlighted that as an emerging area of growth for them. Showed it at Intersolar Europe in Munich earlier in the year, and they've got some products there. So there's definitely a pipeline evolving. That, quite frankly, relative to investor sentiment 18 months ago, has been an area of disappointment. Certainly everyone had hydrogen on the brain a year and a half ago, and you saw it with the valuations out there. And you can't just wave your wand and magically make green hydrogen quickly. You do see Plug Power trying to create a broader ecosystem of essentially doing everything. From the power generation, signing PPAs, to then feeding that through an electrolyzer. They bought a tank company. They're trying to get into distribution to compete with Mark's companies, and then do sort of a white glove treatment to both their own customers on the forklift side, as well as emerging customers on the mobility side as fuel cell trucks start to play out. So I think it's incremental, difficult to quantify, and it'll all be backed up by either natural gas or traditional power from the grid as well.
So we got a couple of questions here that have come in via the chat, and I think the first one that I'll pose to the group here is just what's your sense on the cost competitiveness of green hydrogen versus other types of colors of hydrogen? There's reference to $2 per kW kind of being this point where the magic starts to happen. What cost of hydrogen is going to be the point where you really start to see faster adoption? Mark, we'll come to you first for that.
Sure, yeah. That $2 per kilogram or sub $2 is the number that a lot have talked about. And that's where you kind of start to compete with a gallon of gasoline, in the sort of $3 plus range. So it's like, getting competitive. But the thing to think about, as you mentioned, okay, we've got these different colors of hydrogen. They're probably going to have different values, and you could pretty easily say, okay, well, what's my ETS price? What's my carbon credit price? And do the math on what your blue hydrogen is and what your green hydrogen is. And blue hydrogen, by the way, isn't 100% capturing all the CO2, so you need to make some assumptions around that. But you can kind of work those numbers out. The problem is then, do the consumers value it that way? If you go to Whole Foods and buy organic, you're probably pretty price inelastic, inelastic. You'll pay whatever price you need to pay for those organic strawberries. And I think that we could see that kind of behavior when it comes to these sort of the most green molecule of hydrogen that you can get your hands on. And that's, Air Products describes it as green hydrogen is diamonds, blue hydrogen is gold, and, everything else is sort of different shades of silver and iron ore and so forth.
Very interesting. Well, the other thing, too, in context here is I think hydrogen is seen, I think, as this leading horse right now for the hard to decarbonize sectors, particularly on industry, where a lot of folks have just looked at it and said, look, if we can't do green hydrogen, we just don't know how to do it. But I'm curious, are there other wild cards that you're potentially looking for? Maybe even like biosolutions, bioequivalent fossil fuels. Is that anything that is in your portfolio as a group when you kind of think about, what we see the potential for hydrogen, but what are the risks from other fuels or technologies in your view? Jeff, we'll come to you first for that.
Yeah, I would say, first of all, financing risk is a huge one. The hydrogen ecosystem has evolved over the past several decades. As Mark said, there's a careful industry that's been built to transfer hydrogen around the world, and a lot of these other emerging areas are an interesting, philosophical discussion, but quite honestly, still on the science phase. So, I mentioned the ahead of the curve, then the head of the curve. That would almost be 3 layers removed. So it could be really interesting in the 2030s, 2040s, but not something that keeps me up at night in terms of competitive threats versus hydrogen.
Gabe, thoughts from you on the competitive landscape and where the risk might lie?
Yeah, Rob, I think Jeff probably hit the key points there. It was kind of like talking about earlier, my scope is more on the mobility front, and we kind of talked about the risks there to decarbonizing medium and heavy duty. Is it lack of infrastructure, lack of technology on the battery side? And then, hydrogen fuel cells from a cost being a big issue, and then Jeff noted financing as well. So I think Jeff kind of hit all the key points.
Do you think that policymakers really have a good appreciation for where hydrogen fits into the mix? Because when I look at a lot of the discussion out there right now, there's a lot of talk about energy security. There's a lot of talk about the need for additional supply of fossil fuel resources, at least here in the near term. And it seems like policy is going to be a factor here. So do things have to happen in the U.S., Europe, China, elsewhere to really take this over the finish line in your view?
Yeah, I'll just jump in there, Rob. I think you're already seeing that at the DOE level. Jigar Shah's heading up the loan guarantee program. There's multiple billions earmarked for hydrogen. They're hiring close to 1,000 people to review all of the applications that are coming in, and I think there's already $60 billion that's been applied for all of the loan guarantee programs, of which $42 billion or so has been allocated. So there's definitely a focus on hydrogen in the U.S., but it takes time, unfortunately, at the political level to work through some of the promises that have already been appropriated.
Solly, what about you and your coverage? I know you spend a lot of time looking at the Middle East, and you see these big projects that you mentioned, like NEOM. Where's the policy discussion when you kind of get outside of the OECD economies?
I don't really have too much to add on that in the Middle East. But one thing I would say, in terms of within my coverage, refiners I think are also an important part of this discussion, because we're increasingly seeing them kind of try to see how they can decarbonize, because refiners are actually one of the biggest consumers of hydrogen, and this really is one of the very few ways for them to actually tackle emissions. So increasingly we're seeing them at least give some targets on what they'll do, and they are also, similar to the larger European oil majors, kind of lean towards green hydrogen. But important to note is right now refining margins, as you probably know, are extremely good. But before this year, European refining margins were not doing so well. So these companies weren't really making too much profit or cash. So they didn't really have that cash to spare to really be talking about, to really be spending on these mega hydrogen projects. But I think a policy will be very important for them to be able to kind of see what they can do in the next decade or so, in terms of how they can try to speak, because this is one of those industries where that's hard to abate emissions, and I think they will need some help from European policy to help them decarbonize.
Thank you, Sally. We do have a question about the role that hydrogen could play in Europe's plan to wean itself off of Russian natural gas imports. And I can't remember which one of you it was, but one of you has already made the comment that putting hydrogen in pipelines could be problematic, at least based on the current infrastructure. So is hydrogen, I think the question is appropriate to ask is hydrogen a practical solution for thinking about these kind of near-term problems of over-reliance on Russian gas, or should folks be looking at, LNG and other solutions? So curious, Mark, we'll come to you first to see if you got any thoughts on whether hydrogen's some kind of rescue fuel here.
Well, excuse me, the REPowerEU plan contemplates 20 million tons of hydrogen by 2030 from nothing today. And, that's a really aggressive target. And back to the conversation earlier about, how much renewable capacity do we need? The way that the EU has constructed that is you can't take existing renewable generation for this hydrogen. You need to install new renewable capacity for this hydrogen so they don't cannibalize existing capacity. And if you kind of work it out, you could be talking about 600 gigawatts of additional renewable capacity just to support that. That's a massive number. It's more than 2 times what we have in the U.S. right now. So that's going to be a challenge. And then back to the earlier conversation that we were having about, do we really want hydrogen flowing in to power our furnace in our house? I mean, could be potentially very dangerous. There's been some recent stuff that came out that says, the the exhaust from uncombusted hydrogen is very dangerous for people. So there's a lot of concern around handling this stuff in a consumer application that I think could make it challenging for the EU to solve those problems. I think the better solution for EU is going to be trying to find lower carbon barrels and molecules of methane from around the world, so through LNG. That's ramping up, and you just drop that into the existing system without any of these other complications I'm talking about.
I will ask a follow-up. I don't know if you know the company Snam, but they're like an Italian gas distribution company, and I think they have regularly talked about the idea of kind of putting 10% blending of H2, and there's some general discussion around kind of increasing the blending of hydrogen potentially into the gas grid. Do you think that that's just wishful thinking, or do you think that will actually be attempted?
No, I think it is. That's their plan. They're doing that. I think that you can get, if you get to 10 or 20% blend, you don't have those embrittlement problems. There's another issue if you're running it through a gas turbine. Gas turbines are not built to run on 100% hydrogen, and as you increase that share of hydrogen feedstock into the turbine, you started entering, some mechanical challenges where you have to retrofit the turbine or have something completely new. So those are going to be some limitations, but doing a 10-20% blend, probably not a big deal.
Gabe, I want to switch to the oil side of the equation, given your focus on mobility, because a big part of the European discussion isn't just on gas, it's also on oil. And so far, even if you look in a country like Norway, where you've got really high EV penetration, oil demand's been pretty resilient. So how do you gauge it? How much is oil demand going to be affected, if at all, over the next, let's say, 3 to 5 years by this run-up in EV sales?
Yeah, Rob, definitely a good question. And it is interesting when you look at Norway, and it's like 4 out of every 5 new cars is some form of electric, but their oil demand has held relatively stable over the past, 3 to 5 years or so. And even looking out, our colleagues, my colleague Jason Gableman, and we've all done some work around EV penetration here in the U.S. and what that means for oil demand. And by 2030, even if you are at, let's say, 30% of new vehicle sales being some form of electric, you still have, or I should say from passenger vehicles, you probably only lose, I think the number was maybe 2 to 3 million barrels per day in terms of demand out of a, at least here in the U.S., 20 million or 9 million barrel per day market for gasoline. Overall product demand is about 20 million barrels per day or so out of a 100 million barrel per day market. So numbers aren't really that drastic, and so I think again that kind of speaks to it's called a transition for a reason. Oil demand is certainly not set to fall off a cliff anytime soon. You had one pretty dramatic case in 2020, that obviously being COVID, which drove demand significantly lower in a very short amount of time, but that's for the most part snapped back. You've had a number of economies reopen, and travel has certainly increased. Maybe we're not quite at levels which we were pre-COVID, but oil demand is not likely to materially fall off a cliff anytime soon. And also, again, when you think about new vehicle sales being 30, maybe it's even 50%, some form of electric by 2030. The car park is still 280 million vehicles in the U.S., and so that'll take some time to continue to transition. So maybe by 2040 or even beyond 2040, you're in an environment where oil demand starts to creep materially lower. But, I think from our perspective, oil demand, at least over the next 3 to 5 years, is not likely to materially decline anytime soon.
Very, very interesting. Okay, so we have just a handful of minutes left, and so I want to be respectful of the time. So in closing out, I'm going to ask you a personal question, because I've been contemplating a move back to the U.S. I've lived over here in Europe for 5.5 years, and I'm starting to look, should I get an electric vehicle or should I get an ICE automobile? So should I get an EV? I want to go down the line and ask everyone that question, and then I'd love to get your closing remark on the best way, from your perspective, to invest in either the hydrogen or battery thesis if you've enjoyed what you've heard on the call here today. So, Gabe, we'll go with you. You're still up on my screen, so you go first.
Yeah, sure. Why not? Go electric. There's plenty of new models to choose from. A lot of them are fun to drive. I think once you test drive one, you kind of realize like it's just a better technology relative to ICE, and they're fun to drive. And as long as you could afford it, which again that's materially improved over the last 10 years or so, and you're comfortable with figuring out how to charge it, whether it's at home or there's some public stations that you know of, I would say it's definitely go electric. And in terms of ways to play the theme from a battery standpoint, a company we like is Novix. It's ticker ENVX. They're first commercializing their battery technology in the consumer electronics space. What they've done is really focus on the architecture of the battery to enable a 100% active silicon anode. And so they're showing a pretty nice improvement in energy density versus what you can get out in the market today. So they're commercializing that first in consumer electronics, and they hope to be in automotive applications, passenger vehicles, by 2025, 2026. So that's a story that we like in the battery space.
Okay, very interesting. Jeff, same question for you.
Yeah, no, absolutely. Get an EV. I think you should get it. I'm from South Texas, so I'm biased. Get a pickup truck. Ford's coming out with one, but definitely pay attention to the Silverado. I like the Ultium GM pack. What they're doing on some of the safety features in particular is one to watch. So Silverado would be my choice, Rob, for when you make the move back. Definitely the anti-British car to make the move with. In terms of plays on EVs, Aptiv on the Tier 1 supplier side is my favorite that I cover. Also have some interesting exposure to Li-Cycle on the lithium recycling side. I think it's an interesting name. And lastly, just being a former semiconductor guy, would definitely take a look at the silicon carbide transition and what's going on with Infineon, Wolfspeed, and Littelfuse. Those are names that my colleague Matt Ramsey covers, but would be remiss if I left those out. And then on the hydrogen side, certainly am a believer there. I think it's going to be trains, trucks, buses, and boats, as I mentioned before. Big boys are coming, Bosch and others, but the name I like is Plug Power. Got a nice economic market around forklifts today and emerging into other areas that are worth paying attention to.
All right. Sally, we'll come to you next before closing out with Mark.
Sure. I mean, I actually don't have too much experience with EVs, but I think that really depends on where in the U.S. you might be moving to. I actually only test drove a Tesla once here in London, but it really didn't make sense for me just get a car in general in London, but also perhaps an EV. But from what I hear, I mean, the feedback is almost always positive. So if you can get one, yeah, for sure, go for a Tesla. In terms of the play for the energy transition in general, I mean, I should give the disclaimer that in BI we do not give buy, sell, or hold recommendations. But, I mean, perhaps something to watch. Within my coverage, I think Repsol is just generally very interesting because they were the first company to come up with a net zero pledge. And I think what's happening in the last kind of few months is their energy transition strategy really crystallizing, with them bringing industrial partners for their renewables unit, with them potentially selling 25% of their upstream unit. So I think they're very much ahead of the pack, even when you compare to the other European majors. And when you think about the energy transition, I think they're definitely an interesting company to be looking at more closely.
Okay, Mark, we're going to give you the last word.
Yeah, I have zero expertise in passenger vehicles, whether it's ICE or battery electric, but I'll stir the pot just a little bit. One alternative might be to consider a plug-in hybrid. There's a lot of concern about battery raw material availability over time, meeting some of these targets that we have for the all-electric fleet. A plug-in hybrid can use a fraction of the battery content and satisfy 90% of your driving needs. They're not as nice, but if you're trying to worry about the 20-year battery supply that we've got, maybe that's a solution. So just stirring the pot there. In terms of the stock, Air Products in my group is definitely the one that's going to give you the most exposure. They're aggressively investing. Call it right now the projects they have on the board are going to generate a little over $3 in earnings on a current base of $10. But, even with this just extra project in Oman that may be coming, that could be a second NEOM. And then, you throw a couple more of those in, and quickly you're talking about doubling the company's earnings just from the hydrogen investments that they're making.
All right. Well, thank you so much for that. It's been a pleasure to talk to you today. For everyone who's listening, Jeff, Mark, and Gabe, they're all terminal clients. You can shoot them an IB if you've got follow-up questions. Of course, you're welcome to reach out to Sally and I as well. And we just want to thank you for your time. We're holding the next part in this three-part series in 2 weeks, given the July 4th holiday in the U.S. And for that one, we're going to be talking about the future of oil majors, given all of this energy transition conversation. So look forward to that next conversation, and I hope everyone has a great rest of their day. Take care.